Oh, there I go.
Mhm.
There we go.
Got it? Hey, how are you today?
Oh, better than I deserve, that's for sure.
All right, so we'll start like usually I start about 11:05 because we have got a good amount on here right now, but there was a lot more signed up actually. Okay, so anyone have any questions, anything while we wait? Anything, like I said, anything you're working on, anything you're dealing with on any deals or any listings you want to share, anything you're looking for?
I have one, Giovanni.
Sure.
Hi, this is Sean Lamb from Oceanica International. I just listed a fourplex in East Fort Lauderdale on Northeast Fifth Terrace. It's right behind the Home Depot on Andrews Avenue. Owner is asking for $1.4 million, but negotiable, and maybe we'll do seller financing. So, and he has an extra garage which can be converted into a rental unit. And the lot size is 13,500 square feet. It's quite a big lot in that area. So,
And what type of terms with the seller financing?
well, I think typically 50% down,
50.
and because there is a mortgage on the property, so we'd like to pay off the mortgage.
Oh, yeah.
So
Yeah, we got to pay that off. Yeah.
carry the notes for a few years, and then the buyer will refinance at a lower rate when the market changes. Yeah.
Okay.
Okay. All right. That's all right. Thank you.
If you want, you can put your information in the chat. You're welcome to. If anybody interested in anything like that. And well, like I said, we'll just stop. We're starting a couple of minutes, like I think 2 more minutes. And if you have any questions while we're going on, just ask. Want to learn, but you'll see this actually a pretty interesting topic we're going to go over today. And see, hopefully more people use this and maybe we stimulate some more closings.
I have one question here, if you don't mind, or one statement, really. Along with Ask the Real Estate Attorney, I see here that you also have Supreme Title and Escrow. You also, so you do title work as well, I'm presuming.
I do. Yeah, of course. Yeah.
Well, I mean, you're promoting this Ask the Real Estate Attorney, but I don't hear you talking about your particular business. So I'm leading it with a question. So
Well, my primary thing here is really to help people and educate people. But of course, if I get business out of it, that's great. Usually I haven't been really promoting my title company, but yeah, my title company is Supreme Title and Escrow. We're in Fort Lauderdale, we're in Boca, we're in Miami, South Florida, basically. And yeah, been around since 2003. And I know Dan Campanella, he's on here. Dan, when did you start in the industry?
Oh, 2001, July of 2001.
Yeah. So, both of us have been here around a long time. We've been through the good times, we've been through the bad times, and yeah, and hopefully still here for a while. So Henry said, what the time is it? All right, so we'll get started. Am I on mute? No. Okay. All right. So good morning, everyone. For those who don't know me, my name is Giovanni Nicosia. I'm a real estate attorney. I've been an attorney in South Florida for 25 years. And, as I said, I own a title company called Supreme Title and Escrow, been around 20 years. And today I'm going to do a class, and it's called a 3% mortgage in a 7% world. Basically, what I'm going to do is I'm going to explain some ways that you could actually be closing deals at a lower interest rate right now. And as you know, some people are even getting interest rates right now in the 8s. And Dan Campanella on here also from City National Bank, and he's going to talk about some programs that his bank is offering, which is also really low interest rates. Which I looked at the program; it's really amazing. So I think that'll also give your clients some options as well. So what we're going to start off talking about is basically assumable mortgages, okay? And basically, in the United States, almost 22% of all the mortgages being held right now are assumable from the seller to the buyer, okay? So what types of loans are assumable? Basically, all FHA loans are assumable. All VA loans are assumable. And what's interesting, you don't have to be a veteran to assume these types of loans. I used to think you had to be a veteran. And generally, conventional loans are not assumable, but sometimes it can't hurt to actually call the bank and ask, because you never know. Like I had one deal recently where we're speaking to the realtor about this assumable mortgages, and she asked if she, and I said, no, it's conventional, it's not assumable. So we actually called the lender, and the lender stated that if the buyer was a family member, they would allow the assumable. But since it was like a third party, they didn't. But in that situation, if it was a family member, they will. So as I said, every bank is different. So it can't hurt to call, the bank and ask, because, you never know. So in Broward County, this is just Broward County. I looked up the numbers between, let's say, basically last 3 years. There are currently about 12,000 loans that are active right now in Broward County that are either FHA or VA, which means they're assumable, okay? And the loans that have been taken out during this time, or really prior, are a lot of these loans are 2%, 3%. I mean, when we were closing these deals, some we even did in the high 1%, but generally let's just say 2-3% average, okay? So, and what these loans are, they're assumable, okay? So what that means is that your buyer can actually take this loan over at that interest rate, okay? So let's just say I'm selling my house and I have an FHA loan at 3%, right? The buyer can then apply to assume my loan, and if the bank approves them, they would then take over my loan at that interest rate. And I'm going to kind of show you today how to do that, how to find these, and hopefully give you some options, as I said, that if you are dealing with some buyers, that you could try to look into this, because and I'm going to show you a deal we did a couple of months ago with actually Trevor, who was speaking before, but we did it with him, where his client closed with a 3.25% interest rate. And like right now in these times, okay, so it can be done. So it's just definitely something to be educated on and know about. So just example, like I was just mentioning, the deal we did with him, his client assumed a loan at $321,699. So that's what the seller owed at the time when they were trying to sell the house. So let's just say a normal buyer, if they were going to get a loan at, let's just say 7.5% interest rate, and it needed that type of loan, their mortgage payment would, just for the principal interest, would be like $2,249, right? His buyer, when we closed, got a 3.25%. So their principal interest was $1,478. So that's a $770 savings, okay, just by assuming that loan, okay? And that's a big difference. As I stated, with the 7.5%, that's what would be the principal interest. And here you can see this is the closing statement from that actual closing. You can see we closed June 28th, so just like 3 months ago. The borrower assumed $321,699, and that was his interest rate, 3.25. Okay, closing right now in 2023 with an interest rate like that. Imagine that. Okay, and you can see the payment, principal interest, 1478. It doesn't apply in every situation, of course, but it can't hurt to look into, to see if it's possible. Also, example. Hang on, well, we'll get into that. And here also, look at the closing costs. They charged a loan assumption fee of $900. There was an attorney review fee of $200, credit report 66. So the lender closing fees are really low too. Actually, what was interesting in this too, the lender did not require a new lender's policy for title insurance. They actually kept using the one from the prior seller. So that actually saved the buyer more closing costs. So that's, it's pretty interesting, like how low the closing costs are. You would think, they would try to charge all kinds of fees, but they really don't. The benefits of assuming like an FHA loan. One, of course, you're going to be getting a loan with lower interest rate, lower closing costs, like you just saw. And also, if the bank approves the assumption of the mortgage, like they did there, the seller is relieved of liability. So the loan is transferred from the seller to the buyer. So the seller owes no more money. Okay. So, that's important to know. So it's not like the seller's still on the hook. It's on their credit report. It shows that the loan has been paid off. They're done. Okay. The disadvantages, well, depending on, the bank may require mortgage insurance, but even mortgage insurance, let's say that situation there, I got to look back and see if they require mortgage insurance there. They may not have, because the buyer did put a lot down, like $100,000. The mortgage insurance is still a lot different than paying a 4% difference in your interest, so it's still a lot cheaper. But also the buyer needs to pay the difference. So, for example, let's just say you're putting an offer on a $500,000 house, and the seller has an FHA loan and owns $400,000 on it. The buyer has to come up with the difference, that $100,000. Okay, and as I said, people may not have the difference, but there are situations like I know my neighborhood. Honestly, I don't think the prices have changed, believe it or not, since from 2000 and let's say 21 to now. They're virtually almost the same, or 2022 to now. They're virtually pretty much the same. I mean, of course, some areas, of course, the price have skyrocketed. So, but if it's an area where, let's say someone, like I said, I know where I live, let's say the person got the mortgage 2 years ago and got a 3% interest rate, and now they're selling it, they probably still owe almost, and they got an FHA loan or a VA loan, they probably still owe almost as close as what they're selling house for. So the buyer doesn't have to really bring a lot of money. Trevor, you had a question? You had a question?
Well, not necessarily a question, a statement, because what has happened is that because most of these loans, as you said, is being assumed within the last couple of years, and there are FHA. So most of the times, the buyers do have to pay the PMI because they have not reached that 80 percentile. So even though in this particular scenario in which you're showing, the buyer did put down a chunk of money because of the equity between what the property was being sold for based on what the owner had owed, the buyer still had to pay the PMI in this particular case because it doesn't matter what the difference between what is being put down versus what is owed is. Was it that they still owed 80% of the original mortgage balance? And in this particular case, they still did. And because of a lot of these mortgages are being assumed within recent times, so to speak, you will still have that PMI.
But do you remember how much the PMI was a month?
20 years ago.
Do you remember how much it was a month?
Yeah, it was a minuscule amount at that point. I think it was less than $150, to be quite honest.
Yeah, so if you're saving $750, even if you're paying $150 in mortgage insurance, you're still saving $6 a month. That's still a big difference. Okay. And if anyone has any questions, just feel free to ask. Okay. Now, like I said, the other ones are the VA loans. Once again, lower interest rates, lower closing costs. And what's like I also mentioned, anyone can assume. It doesn't have to be a vet. Now, the only problem is if it's a vet assuming it, well, I'll get to that. Oh yeah, and the same thing, the seller is relieved of the debt, just like I mentioned it. How it comes off the seller's credit report, they don't owe the money anymore, and it's now the buyer's responsibility. Now, the disadvantages. Yes, go ahead, Michelle.
So if if there is a large balance that still would be due when you weigh the payoff price versus the purchase price that they were asking, if it was like $100,000 or more, and of course the FHA buyer is not going to have that, are they able to request a second, another mortgage of that? Can they mortgage that amount? Or is that considered
that
a
would be
second
up to,
mortgage, and then a lender would have a hard time? They would have to take second place if they do mortgage the amount.
that would really be up to the lender, because I mean, some lenders, of course, don't want any, but regardless, the assumable mortgage would be in first position, so they're protected, you know?
Right.
So
if you use the same lender, would they consider doing a second mortgage to qualify the buyer to actually offer the ask price on the property?
Well, let me ask you, Dan, have you ever come across, like, do lenders generally, what do lenders look at in order to, about giving a second mortgage when someone's buying a house?
Yeah. So when
Because
it
they
comes
would be
down,
able to qualify at the, if they're getting the bulk of the loan at the 3.25 and a smaller amount that needs to be mortgaged at the 7.5 or whatever the current rate is, they would still qualify if that's the purchase price they were going after.
so this is an area that I don't have the greatest amount of expertise in, but I will tell you that every loan program, the FHA, the VA, all have what's called a combined loan to value amount. Assuming that you're assuming the loan, I'm assuming you're assuming the same terms as before.
Yeah.
So you wouldn't be able to exceed the combined loan to value of the previous loan. So for a VA, an example, it's 100% plus the upfront funding fee. So potentially speaking, yeah, you probably could get a simultaneous closing second to do, or at the very least do it the next day to help fund the loan. But presumably I would say yes, but because you'd be taking on the terms of the existing loan.
Yeah. Yeah, I would say just like anything, even just buying a normal house, it's a case by case basis, how much they, because some banks will allow it and some won't, and so but what you just said, also can't hurt to look into and ask. The worst that happens, they say no. So it can't hurt to ask, and some may allow it, I think. Okay. Wait, so I cannot get another. Okay. Now the disadvantage, like we just talked about, having to pay the difference, but another disadvantage when you're transferring a VA loan, the seller cannot get another VA loan until that first loan is paid off. Okay. So I'm sorry. So if they're transferring it to a vet, they're fine. But if they're transferring it to a non-veteran, then they cannot get another VA loan until that loan is paid off. So actually, I just was speaking to a realtor who, he's elderly, he's in his 70s, and he was talking to me about this assumption of mortgage, and he's a vet, he has a VA loan, and I told him, the only problem is if you transfer it, you cannot get another VA loan until that's paid off. And he's like, fine, I don't care, because I'm not going to be buying anything under VA. I don't plan on it. So but you definitely need to disclose to the seller that that's definitely a drawback, that if they plan on selling this and buying another property with a VA loan, if it's a non-veteran, they can't do that. But if it's a veteran, fine. How to apply? Okay. Basically, what you're doing is you're applying with the seller's lender. So example, let's say I was selling my house and I had a 3% mortgage, and I was advertising that my loan is assumable, right? And my loan is, okay, we'll just say what city, Nashville, okay? And what would happen is then I would contact the city, Nashville, stating that I wanted to attempt to have my loan assumed. They would give me their application. The buyer would fill out the application. They would basically pull the buyer's credit. They would ask for tax returns, bank statements. It's just like they're applying for a regular loan with a lender, but here they're going directly to my bank rather than having another person doing the loan for them, okay? So they would be applying directly with my bank. And of course, they're going to, as I said, review them. And if they feel that they're financially qualified, they're going to hopefully approve them. Okay. How do you know if the seller's loan is assumable? Okay. The first step, one, of course, ask the seller what type of loan they have. Okay. Some sellers, of course, are going to know, some are not going to know, but more likely if someone took out an FHA loan, VA loan, they're probably going to know. One way also is to look at the mortgage statement. A lot of times mortgage statements will actually show the type of loan, whether it's FHA, VA, or conventional, will also show the interest rate. So if you're meeting a client on a listing appointment, you can ask, hey, can I see the mortgage statement? That might show it. Another way is the public records, which I'm going to show you how to look it up. Another thing, which if you're looking for properties that are assumable, I noticed, I did it just the other day. I went on the not the MLS actually, because I don't have access to MLS, but I went on realtor.com and I went on Zillow both. And under in the search option, like additional terms, where I put in the word assumable, and almost 20 properties came up in Broward County where the realtor was advertising loan may be assumed at this rate. So you could actually do a search and put the word assumable in and see what's out there that may be assumed, because some realtors, they realize this already and they're advertising it. Now, when I say about searching it in public records, this is a website, honestly, that I think is amazing, that I've been using since I got in the title business. Like when we're doing our closing on the property, how we usually get a lot of our information. It's called Netro Online with just one O, okay? And what you would do, you go to this website and you would click public records, right? And then it shows you a map of the United States. And then you click the state. So let's say Florida, you would click Florida. Then it would show you a map of Florida and you click the county. So let's say Broward County. Then it would show you the list of all the public offices in Broward County. It would have a link for the property appraisers, the recording office, the tax division. And then same thing, you would click that. So you would click the recording office, and then you could do like a public record search. You'd put in the seller's name, and boom, everything with that seller's name comes up. So you would look for their mortgage, probably what they took out when they purchased the house. And then you look at the first page to see if it has a FHA or VA loan. Like here's an example. This is the first page of this mortgage. So like I said, if you did this, let's say this person here was selling their property and you looked it up and you see right there, FHA case number 095. That's how, same thing. If it's a FHA or VA loan, they will always have the case number on the first page. So that's like, a way to look at it. And it's also what's really important too, even, so as a seller's agent, one, it's good to know as a way, like I said, like how some people are already advertising it. But as a buyer's agent, it's good to know too, because example, let's say you're showing a property, your buyer's really interested in this property. They're like, I love this house, but there's no way I could afford it, with a 7.5% interest rate. You could then maybe do some research and find out whether or not the seller has an FHA loan or a VA loan. Find out what they owe, and then maybe present that to the seller. They listen, we're very interested in the house. Is there any way, we could submit an offer where you allow us to try to assume the loan? So, and maybe getting it at that interest rate, maybe it is more affordable for your buyer. So that's something definitely to look out for. How to submit an offer to assume a mortgage, okay? Well, first, of course, when you're filling out the contract, in the purchase price, where you see like over there, the deposit, additional deposit, financing, other. Probably in other, you'd probably put like D, assumption of mortgage, you'd put the amount. You try to find out from the seller what they owe and use that as the amount, okay? Then if you look at line 132, you're going to check off assumption of existing mortgage. So you're going to check that off on the contract, okay? And of course, if you're ever working on one of these and you need any help, feel free to reach out to me anytime. I will always help you. Even if I'm not doing the closing, I will always help you. And then there's an assumption of mortgage addendum. So you would add this to the contract as well, stating the amount they're going to assume, the interest rate, and stuff like that. Hang on a second, just want to read it. Yeah. So you would add that addendum. So basically, you're going to submit a regular contract and just, of course, make everyone aware that you're attempting to assume the mortgage. And of course, if they're not approved, they can cancel and get their money back. Of course, as long as they act in good faith and try to get that loan. What else? So why would a lender agree to approve assumption of mortgage? Okay, one, hang on. Someone asked what's the name of the site. It's Netro Online, Netro. Hang on. Someone please type it in. Someone could type it in. Hang on 1 second. www.netro on Netro Online. Thank you so much. Yeah. so I was saying, so one, they're keeping the person as a client, because example, let's say I was going to buy a house. I'm going to speak to different lenders, different banks, right? And now, of course, if I use one of the different bank, they're losing that client. So here they're actually getting a chance to keep a client, keep making money, and make sure the person's qualified. They're reviewing their credit report, they're reviewing their financials, they're qualifying the person, here's like example, like that loan I said at 3.25%. There's 28 years left on the mortgage. They're still making over $10,000 a year on interest, or I'm sorry, from that loan. Like I have a property where I have like a 3.7% interest rate on, and I'd say 2% of my mortgage goes to interest still, even though it's a 3.7%, almost 2% of my payment goes to interest. So they're still making money. They're keeping the person as a client. And yeah, let me see. I think that might be it. But does anyone, before we go on with Dan, does anyone have any questions about this? No one?
I have a question, and
Go ahead.
maybe you and Trey, because you guys did one. I'm assuming, they're assuming the payment in the remaining term, correct?
Yeah, everything stays the same. So I'll ask Trevor, since you're on here, because like I said, we did a closing with Trevor. Was it an easy process?
It was very, very easy. I mean, the process, everything, once you submit the contract submit a contract over, and the lender gets involved, and the lender contacts the buyer directly and obtains all the necessary details from the buyer. So you're basically in the background. You see the information that, because it has lift dates and it has dates in which the buyer he has hit those target dates. But the process is relatively easy. I think we started the process in June. However, the only problem was the buyer wanted to move in, close in July, but the seller wanted to keep his kids intact for the particular school year, since the school year was coming to an end, and that was the only pushback that we had. But other than that, I think it was 35, 40 days from beginning to end, and it was really, it was, like I said, the transaction was smooth. Now, piggybacking off of what you said about the VA loans, my first mortgage that I obtained here in Florida was through the VA as well. Even though I was not a veteran, I purchased my home with Assumable, no qualifying. And that process was really, really easy. The only thing that was different with that process is that there was no qualifying on my behalf. The seller, he could also purchase a new home using his DD-214 after 3 years. So since I was not a veteran, he could use his DD-214 became active again after 3 years. So he had to wait 3 years in order to use it again. If it was to a veteran, he would just swap the DD-214 with that veteran, meaning that the new veteran that is purchasing his property would give him his DD-214, that he can go in and purchase a new property, transferring it that way. So it will be an inter-transfer with the Veteran Association. But if it is not a veteran, it is 3 years for that before you can use the DD-214 once again.
Okay. All right. So, like I said, any questions about this, about Assumable mortgage before we proceed? All right. But if, even like after, if you guys have any questions, feel free to reach out to me anytime, any help you need on this, whatever. Just real quick before I proceed, as I said, what I'm doing right now, since October 1st, I've been doing 3 classes a week, every Tuesday, Thursday, and Saturday. I'm creating like a training program, and I have a website. It's called asktherealestateattorney.com, asktherealestateattorney.com. And what I'm doing, actually, on November 22nd, I'm going to do a $1,000 cash raffle. Whoever's a member is eligible. And basically, if you go on there and you put in the word law, the first month of training is free. What we're doing is, like I said, all the videos, like all the classes, there's a video library, there's a forms library. I'm already working on my November calendar. We're going to have like contracts classes. I have a chat GPT class. social media classes. I do like some, I call it like Top Producer Tuesday, where I try to get one of the top realtors in the area or nation to speak on different topics. Not top, basically like a mastermind to help you give the, tips and stuff like that. So as I said, asktherealestateattorney.com, use code LAW and be eligible for the $1,000 raffle. And now I guess we're going to proceed with Dan. This Dan Campanella, and like I said, Dan's gonna, I've said it only on a long, long time. He's been in the industry forever, and he wants to talk about a program he's, has right now going on.
Yeah, I like to go by
Okay.
Handsome Dan Campanella. You guys can tell
Okay.
why, right?
All right, sounds good.
Anyway, this program is called the City Smart, and I have it on here with the streets moving fast because it can really get your market moving, right? Where one of the first questions that everybody asks, or that you're asked, or I'm asked on a regular basis is, when are rates coming down? Rates are too high. I can't afford to buy a house right now. Rate. Well, this program kind of helps you get past that objection, if you will. I don't think I have the ability to control the slides, right?
Okay, go ahead.
I appreciate it. So the program features, you can put as little as 3% down, right? So 3% down payment. There is no mortgage insurance. My bank, in many instances, the bank will give a grant up to $5,000 to help offset some down payment and closing costs. It's very lenient on condos. There are some loan limits as far as the loan size and certain and product categories. And I'll get there in a second. Up to 450, up to 600,000. And this is the program stopper here, as the interest rates are between 3.5%, 4.875%, or 5.875%, depending on their income, depending on the income and being applied for. And I'm going to go to that next section right now and try and verbalize these as best as I can. This didn't get centered well. That's cool.
Yeah.
No problem. The first program, the first column you're going to see is our City Smart. Our City Smart program is good in the same counties you see on the middle slide: Palm Beach, Broward, Miami-Dade, Osceola, Orange, Lake, and Seminole counties. If your client's household is up to 80% of the area median income, they're going to qualify for the City Smart. The City Smart can be bought or used anywhere in the county whatsoever. All right. So that means if they want to buy anywhere they want, they can buy in any of those counties they want, as long as they're under 80% of the area median income. They get to 3.5%. They get up to $5,000 in seller contributions. They get no mortgage insurance. Loan amounts up to 450 can be used on single families, condos, and townhouses. They do have to complete a home buyer education class. I think that is the maybe the biggest caveat of that particular slide. See if I missed anything. Nope. A first-time home buyer in that instance is you can't have owned a home in the past 3 years. Middle slide, or middle program, which is City Smart Workforce, is for people who are between 80.01% and 140% of the area median income. Again, 3% down, no mortgage insurance, can't own any of the properties. Cannot. This one's different. Doesn't have to be a first-time home buyer. We got advanced there. Too far, too fast. They cannot own any other properties at time of closing. All right. So this one, you don't have to be a first-time home buyer, but you cannot own any of the properties at time of closing. They still do get the up to the 5% or $5,000, 5% up to $5,000 grant, and the loan amounts go up to $600,000. Now, one of the caveats about this one is they do have to buy in certain zones. It's not for anywhere in the county. You have to buy in certain specific zones, again, within those counties. Last program is the City Smart Plus. This is kind of for anybody else. Or for income above 140% of the area median income. There's no income limit for it, but it's above 140%. Again, now you're at a 5.875% interest rate. You get the 3% down, you get the no mortgage insurance. You can't own any other properties at time of closing. Again, there's no income limit, loan amounts up to $600,000. What you don't see here is you don't get the $5,000 grant in this case. All right. And with the two middle ones, there are asterisks there on the rate because there's rate discounts. Those are rate discounts, assuming all discounts. But the discounts really come as long as you're willing to open an account with City National Bank, as well as set up a direct deposit and an automatic draw, which for 2% in interest rate is well worthwhile. We were talking about the FHA and FHA in particular. If you had a $400,000 home, with the FHA versus with the current rates in the FHA with the mortgage insurance and such versus the 4.875 rate in the middle, it's like a $700 a month difference, right? Like, so you have a client who's going to pay $700 more a month and you can put them in the City Smart, they're going to be saving $700 a month. They are going to love you. I'm going to get to the questions at the end, but we're going to keep going. I'm going to go through those zones really quick. And again, where it works, Palm Beach County, Broward, Miami-Dade, and some counties around the Orlando area. Now, you guys may go, the biggest question I have, and the biggest question I have when it comes to agents and listing agents in particular is why? How do you guys do this? Why do you guys do this? And the hardest part about this program is realizing it exists and convincing people that it works and it exists. So number one, we're a bank, we're a lender. Banks are required to do what's called CRA business, Community Redevelopment Act business. And this is the way for my bank to get their CRA business, to make sure that we check all the boxes for the OCC and that we're good to go. So this is how we do it and why we do it. Again, I talked about the income levels and where they need to buy depending on the counties. I'm going to fly through these maps. I'm not really going to go too deep into them. Basically, what you'll see in every county that this has, and this is Palm Beach County, it looks like it started off with, there are areas that are really nice on the water, on the intercoastal. You can keep going through these. There are areas that maybe that aren't the nicest. Yeah, there are, but each county has, as far as I know, waterfront properties, has all demographics of properties. It could be from the lowest of the low to the highest of the high. I know if we got the Broward County and Miami-Dade County, if they're in here, I don't know if I did or put them in there or not, that there are literally beachfront properties that qualify in these zones. Now, my coloring is horrible, but I'm the one who, colored in these crayons. I can show you how to get to these sites and whether they'll fit or not. But this will just kind of give you an idea. And I just wanted to give you an idea of some of the areas you might pop on there and go, oh my God, I closed a loan. I closed a home in there recently. It just goes through all the maps.
Dan, is it okay? Like if people email, if I share this with them, your PowerPoint?
Yeah, absolutely.
Okay.
This is public. I can show them how to get to this on the web.
Okay. Oh, okay. Yeah.
If we can go to the slides through the maps, that'd be great.
Okay.
All right. So why this works for a real estate agent. Okay. What agents I'm finding out are doing right now is this is a great hook, right? Whether they use the program or not, it's a great hook. I like to say those who start are more than likely to finish, right? And I put there, I should make a t-shirt, right? Because those who start are more than likely to finish. If you don't start, you're never going to finish. So if you can hook a client, regardless of their income level, I've got doctors in this program. I've got people who make a lot of money thinking they're going to buy in this program. They very well might buy in the program. But if they don't, that's okay. I'm a full service lender. I can do all lending. I have all options open to them. So this program is a great hook to get them started. It is a great program if they can stay in it. And when I say stay in it, find a property in one of those zones. You're going to find, and I have found already that I'm dealing with agents and I'll have buyers and what have you from all different agents. And all of a sudden I'll be like, oh, I have Mrs. Black and Mrs. Lester and Mrs. Jones all putting an offer on the same place, right? So there are 3 different realtors, 3 different agents, 3 different offices, all putting offers in the same place because we know there is a little bit of a supply issue, and there's especially a supply issue in some of these zones right now because this program is so amazing. But again, I can do all types of loans. So if they don't fit or if they can't find something and they fall in love with something else, we can certainly do it, regardless if they're in or out of the zones. Some ideas for you as agents, right? Why this program can work for you. Number one, you have your fence sitters. Hey, I'm going to wait till rates go down. Call them on the phone. Look, guys, hey, you said you were going to wait till rates go down, but I found this guy. He's got this program. It's amazing. You guys should at least talk to them. Again, if they don't start, they're never going to finish. So this is a great way to get those fence sitters to start. You may have listings in these zones, right? So you may go, hey, I have a listing that I think falls in the zone. It falls in the zone. Me personally, if I was a realtor, I'd be like, put in the broker comments, hey, specialized financing is available in this area through my lender. The rates could be as low as boom, 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 right? Because you guys, I'm not an attorney or a realtor, but do whatever's compliant to do in there, and you can do that, and your property all of a sudden becomes more favorable because it has the ability to have these stupidly low interest rates. Another one I love, and you know, I'm real big on staying in contact with my, what I call my Bob, which is my book of business for you guys that your past clients. You know, if you look in these zones, go, crap, man, I wish I would have known that this would have worked for a client. I closed somebody there, you know, a month ago, 6 months ago, a year ago, and they're in that zone. Well, guess what? This program works on refinances too. It is such an easy, warm call for you to go, hey, Mrs. Jones, you remember you closed on that property with me 6 months ago. You had a 7+ rate, right? Yeah, you know what? I just ran into this guy. He's got this amazing interest rate. And I thought of you, and I think of you all the time. So I wanted to make sure I could do what's best for you. Mrs. Jones is going to love that call, right? Mrs. Jones is going to go, oh my God, you know, you guys, you called me and you helped me out. Make sure everybody goes to you as a realtor. I'm going to make sure I refer you to 12 different people. So it's a great way to get a warm handoff. I don't know if I have any more slides. That might be the last one.
Yeah, it's the last one.
All right. Well, I'm going to go through these questions real quick I saw in the chat,
Okay,
and see if there's anything I can answer. All right. So I said, follow me on TikTok. Let's go to the next thing here. That's the raffle. How do I decide the area? How do you, so the area is decided off of a government site called FFIEC. Again, it's a public site. I think it's ffiec.gov. And ultimately, I like to call these up and coming areas, but if I were to call them what they were supposed to be called, they're low to moderate income areas. All right. That's how we get our CRA credit, because we're doing community redevelopment. I am telling you right now, you guys as agents know the areas better than I do, but some of them have $1 million, $3 million, $4 million homes in them, and some of them have places that you might not want to drive through. You kind of have to know your area and where the areas are, and where your client might want to go. Can you provide a copy of this slide once? Yes, we can provide it. I should probably give you my email address too. I'll pop it in this thing real quick.
yeah, and some people have emailed me and I'll definitely send it to them.
All right. All right, just pop that in. Let me see if there's any other questions there. I'm not as good as you, Giovanni.
Someone said,
you're doing it as you go. Is this info on Dan's website? Nope, it's not. I'm your best source of info. I love phone calls. I love having a conversation, setting it up. Can you do a 2-1 buy down also? No. This program, in fact, you can only buy it down. You can only pay 1% to buy it down. So it can go from 3.5 to 3.25, or from 4.875 to 4.625. You can only pay 1 point to buy it down by a quarter. Martha, okay, keep going. Maggie, these are emails. Easier to send out to the class. Your money. Don't miss the next class. All right, talk about the agents. All right, I might need help on this one. Oh, that was Trevor. All right, talk about the agents. Can also use your info on their marketing to open houses. So yeah, look, if you guys don't know what rate plug is, do you guys know what rate plug is? Have we talked about rate plug before? It's something that you probably all have available to you from being able to get on the MLS. If you're interested and you want to do open house flyers or something like that, I can set you up on my rate plug. I can send you an invite. You'll log into my rate plug. I'll be able to see your listings as they come available. And it also gives me an automatic way to do flyers for you for open houses. So if that's something you were interested in, I'm happy to do it. Again, just send me an email and I'm happy to set that up. Can a foreign investor assume on an existing mortgage? That's for you, Giovanni.
yeah, the truth, I doubt it, because just like, I mean, a foreign national can't buy an FHA loan or a VA loan, so because they still have to qualify. So I really doubt it, honestly, but that a foreign national or something could assume it. Any other questions out there?
Here's my contact information again. Let's see, I got 5 more messages. Oh. All right, I'm going to post my contact information right here, guys. Any other questions?
Okay. Good.
Yes, I have my hand raised. Can I speak?
Oh, go ahead.
Okay, awesome. Great afternoon. It's good. Well, great morning. It's still morning time, Dan. With this program, can they use the DPA program, whether it's like the Florida Bond or the Broward County assistance?
So not bond, but yes, they can use DPA programs along with it. It's actually quite common to couple those two things up. And I don't know if I touched well enough on, like I said, it's kind of lenient on condos. You know, you guys will see often, hey, 25%, I need 25% down. Whenever I see a listing that says I need 25% down, to me, it's code word for that condo doesn't have enough reserves. Well, this loan is very lenient on that. If that's the only issue that the condo has, not having enough reserves, we're more than likely going to make an exception on it. If there's multiple issues, condo doesn't have enough reserves, there's litigation, there's a special assessment, there's a high investor concentration, you know, maybe we're not going to make the exception on the condo. But if it's just reserves, we're probably going to make the exception on it. If there's other issues with the condo, we've been known to make exceptions for it. When they're putting a larger down payment, it helps. So when you couple that with the fact that some people use down payment assistance programs, that's larger down payment to us. We're only obligated to the first mortgage. We're not obligated to the grants. So, you know, if somebody were, I'm doing a loan for a young lady right now who I want to say is buying a $240,000 house and she got a $50,000 grant. Well, that's over 20% down. It's like 21% down. She's using some for closing costs. That helps forgive a lot of problems that might happen with the condo.
Yeah, so I don't know, maybe you want to put your information in one more time.
Yeah, I
think
just
it's-
dropped it in the chat.
Yeah, because there's like a lot of messages and it might be really high up right now.
I was just gonna ask,
I feel like I'm gonna be busy.
Yeah.
I was just gonna ask if you could just go back to the first slide where it actually had his contact information on it.
Yeah, let me just see. Did I really? Oh, that's a good one. Yeah, here we go.
It was that one. Go back. Yeah, I just gotta
Yeah.
load it in. There it comes.
Thank you.
Here I come.
There you go.
Here I come to save the day.
Got it. So, any other questions?
I talked to a group the other day on this program. The guy's like, well, what do you have that's new and different? I looked him square in the eye. I said, look, if you can't sell this, you should get out of real estate because this program is so good. It's just ridiculously good. So hopefully you guys can find and just be a lift and in this slower time, maybe find a client or two that fits and earn a paycheck, right?
Yeah, exactly. That's why, you know, we're doing this class to hopefully, because of course, the more business you do, the more business I do, the more, you know, it benefits us all. So that's what we're trying to do, trying to help you get more business. And as I said, you mentioned grants. Is that a part of the program you're talking about?
So it's twofold. The bank gives a grant. That $5,000 I'm talking about is literally a grant. Half of it can be used towards down payment and half of it can be used towards closing costs, or all of it can be used towards closing costs. It is earned straight through. Once you've closed, you get it. Okay, done. It even works on refinances, believe it or not. So if you want to make those calls to people you've already closed, it still works on refinances. So it's really neat. The other grants, the other grants that were brought up, I don't know who was talking, but the other grants that were brought up, they are usable, right? But those are from municipalities, those are from government agencies, those are from you know, community development people that have grant money. Yes, we can use them in conjunction with this program. I think this program goes up to 105% combined loan to value. So I know the minimum down payment from the buyer's account has to be at least 1% of the sales price. So your buyer has to come up with a minimum of 1%. You know what I didn't talk about, and let me enter this real quick in here, and I don't want to take too much time, right? But it does require a minimum of a 620 credit score, and the client cannot have lates in the past 12 months on anything. If they don't have 3 trade lines, we'll use alternative sources. And one of those, we're going to ask every time about rent. If they're not renting, it's okay. I need to have a non-rental or living rent-free letter. But they need 3 trade line, minimum of 3 trade lines on their credit report, minimum of a 620 credit score, no lates in the past 12 months. If they don't have current credit, they can use alternative credit, which means they provide us with at least 3 trade lines that they've paid on time for the past 12 months. And we're always going to validate their rental income, or not
What
rental
is
income.
it's basically
rental.
like minimum credit score right now, just on a normal, let's say, conventional loan?
620.
So it's about the same.
Yeah, 620 is the same for a current mortgage.
Okay, so it's a little
FHA goes lower. I actually don't have lower on FHA. It's actually hard to find a lender who's willing to do the lower on an FHA.
bit. Okay. Any other?
Yes,
ahead.
I do have a question. If it's two, like husband and wife on a loan, do both of them need to have the 620?
If they're going on the loan together, they both have to have the 620. It's we're to use the lower minimum, middle score. And when I talk about the categories they fall in, tier 1, 2, or 3 there, it is based off of household income. So even if I don't have both clients, both buyers on there, husband and wife, or maybe it's, son and mother, or what have you, if they're in the household, we want to know what their income is, and they're going to fit in the program based off of household income, not applicant income.
So
That
I
answer
have a
your
question. So someone who, because I know you mentioned that lenders aren't really accepting FHA on the low end of the credit scores. So someone with like the 580 or 590 or 600, you're saying that they shouldn't really look into
No,
it
look,
because they won't be considered.
It's not that they shouldn't. I'm telling you as a bank, and I, if I give you my resume, I worked for First Union, Wachovia, Wells Fargo for 20 plus years, and now I'm at City National Bank for the past 2 years. I can tell you that at every one of those stops, none of us accepted less than a 640 credit score, and the reason for it is the banks with FHA, they kind of hold you a little bit, they hold the banks a little bit more responsible and hold your feet to the fire on the sale and purchase of those transactions. So it's really hard to find a bank that will do it. It's not hard to find a broker that will do it, because there are lenders out there that will accept a 580 on an FHA. There's lenders out there that will accept a 600 on a VA. It's just a matter of finding the right lender. I'll just saying out loud and straightforward that I'm not that right lender.
Got it. Okay, thank you.
Any other questions? Okay. Sweet. All right. So I guess
Appreciate you guys having me.
Huh? No, thank you for providing great information. So once again, thank you everyone for joining in. Saturday I'm going to do like a 10 o'clock, kind of like a questions and answer thing. Where basically, anything you're dealing with, we're going to go over, and I'll go over a few topics. Tuesday I'm going to do a full contract class. I call it Common Mistakes in Drafting the As-Is Contract. I teach this actually for the Miami Board of Realtors and the Fort Lauderdale Board of Realtors, or I think I'm the only attorney in South Florida who teaches for both boards of realtors. So I'll be on Zoom. It's a really good class. Like, regardless of how experienced you are, I go through the entire contract. I point out parts of the contract that cause issues, cause fights at closings, buyers lose deposits, realtors get in trouble, and really give you some tips to avoid them. As I said, you will definitely learn. I don't care how long you've been in this business, you will definitely learn. So look out for the information on that. As I said, check out my website at asktherealestateattorney.com. Join, use the code LAW, and you'll be eligible for that $1,000 raffle on November 22nd. The people who are already members, you're already entered into that. And that'll be a nice gift for someone right before the holidays. Any other questions? If not, thank you so much, and hopefully you can tune in on Saturday or Sunday, or Saturday or Tuesday. And if you have any questions, just reach out to me or Dan, and about anything, like even during the week, if you have any questions, if you're dealing with something, you need some help, reach out. Both of us are always there to help you. So once again, thank you so much, everybody. Hopefully see you Saturday or Tuesday. All right.
Thank you.
Thank you. And I'll send you those PowerPoints. Okay.
Thank you so much.
Bye-bye. Have a great day, everybody.
You
You
too.
too.
Okay, bye.
Appreciate you.
Thanks.